OK, it's time now for some business news, and Brian Quinn joins us here on set with a look at the latest from the world of business and finance, starting with Air France. Workers there set to strike once again this Monday.
That's right. France's finance minister has warned that Air France's very survival may be in the balance. Bruno Le Maire told French television that the state wouldn't bail out the struggling airline as staff begin their 14th day of labor action. Andrew Hillier has a report.
A warning from the French government that time is running out to save one of Europe's biggest airlines.
If the company does not make the necessary efforts to remain competitive, Air France will disappear, and I do not want that to happen. I appeal to the sense of responsibility of everyone involved, flight crew, ground staff, the pilots asking for unjustified pay increases.
France's finance minister told French television that employees had to resume dialogue with the company's bosses. He also warned that despite being a minority shareholder, the state wouldn't come to the carrier's rescue.
Those who think that whatever happens, the state will come to the rescue and just mop up any losses are wrong.
It comes as staff begin another round of industrial action at the airline in a growing dispute over pay. Air France says close to 85% of flights are likely to run on Monday. Unions are demanding a 5.1% wage increase this year. On Friday, the company's chief executive stepped down after staff rejected a pay deal that would have seen salaries raised by 7% over 4 years. The ongoing turmoil has led to the airline to downgrade growth expectations for 2018. The strikes have already cost Air France €300 million.
Well, the UK's business minister says a customs partnership with the EU is not out of the question. Exiting the EU's customs union in order to allow the UK to negotiate its own trade deals was a large goal of the Brexit movement. But Britain now faces the tough task of avoiding a hard border between the UK's Northern Ireland and EU member, the Republic of Ireland. Under a customs partnership, the UK could collect customs duties at its border on behalf of the EU and return tariffs on goods that don't leave the UK. Business Minister Greg Clark told the BBC's Andrew Marr Sunday that despite pressure from impending deadlines, the government is taking its time to find the right solution.
I think it would be a mistake to have to move from one situation to another and then to a third. If we can make progress as to what, which I think we can, as to what the right arrangement is for the long term, then it may be possible to bring that in over that period of time.
Time now for a check on the markets. European indexes with a muted opening after a strong Friday session on Wall Street. London's FTSE 100 is closed for the May bank holiday. The CAC 40 here in Paris and the Frankfurt DAX just on either side of the flat line. Frankfurt right around flat. Asian indexes mixed in Monday trading. Investors working through last week's trade talks between the U.S. and China, as well as Friday's U.S. jobs report. The Nikkei in Tokyo closing just under flatline as we see here. The Shanghai Composite up around 1.33%. Hong Kong's Hang Seng just above the flat line. The Kospi in Seoul is closed for a holiday as well. Big mover on commodities markets is oil. WTI trading at over $70 per barrel for the first time in over 3 years. Brent crude topping $75 per barrel amid Venezuela's economic crisis and fears of the Iran nuclear deal falling apart. Earlier, Stephen Innes, head of trading Asia at Owanda, gave us some more insight on oil's moves.
WTI shot above 70. Brent traded above 75 today. And, you know, these oil prices have such far-reaching implications across multi-asset classes. And the fear is that it could actually drip through to provide some inflation bounce. And I think this is what's also keeping investors a little bit nervous also, is that perhaps this could lead to higher U.S. interest rates. And that's obviously a negative for equity markets.
And finally, for business, how much is your data privacy worth? Well, for Facebook users, apparently not too much. A new poll by Reuters Ipsos has found that 3/4 of the social network's users are at least as active as they were before the Cambridge Analytica scandal broke in mid-March. And Facebook initially lost roughly $50 billion in market value in the wake of revelations that a UK political consulting firm had accessed the data of millions of users without their permission. While the percentage of adults using the site daily dipped slightly, the poll found that half of Americans say they hadn't changed their Facebook usage, while a quarter said they were actually using it more. No such thing as bad publicity, I suppose, Thomas.
Absolutely not. Brian Quinn with that business roundup. Thank you very much.